What would you like to hear the Federal Reserve chief say?
Well, I think what you'll hear is you'll hear a lot of discussion about risks and all of the things that are dominating the headlines. But I think the main message and the thrust should be that the U.S. economy at present is doing just fine. Labor markets are quite healthy. Inflation's in the neighborhood of their target. And I think the message is going to be that means we keep going. I think those that are looking for signs or hopeful that there might be a pause out here will be disappointed. And I think on net, it'll be more of a stronger message than a soft one.
Why do you think we're so much more focused on the trade fights and tariffs, which as an absolute number are relatively minuscule, and not more on interest rates going up on what is a heavily indebted United States, both from a corporate, from a governmental, and from a personal perspective?
Well, I think there's most of the people, including myself, that look at the tariff story do end up saying the overall costs are somewhat modest. But that, I think, belies two things. One is that the costs are heavily borne by the consumer. So I think it's easy to identify specific industries and products and consumers that might be hurt, and that tends to make for better copy in the sense that we can identify where the problems are. The other is that even if it's a relatively low cost for the United States and perhaps even China, it's not a low cost for emerging markets. So I think it fuels the story that emerging markets are being buffeted by a variety of shocks, including political weakness at home, Fed hikes, a strong dollar, and protectionism, and we are seeing that volatility show up in markets.
So do you believe then, because a tariff is a tax at the border, do you believe that the tariff increase will ultimately be 100% borne by the consumer, that nobody is going to, along that chain of trucking and shipping, and is going to bear that cost themselves or help eat it or mitigate it?
So in the long run, I think a lot of it will be passed through. Long run is probably several years in this case, and this is one of the reasons why we think the costs up front to the economy are relatively modest. We think that there is room for the corporate sector, which enjoys fairly high profitability on average and fairly high margin on average, to absorb some of these input costs. So in some cases, the prices will get passed through. Think steel and aluminum tariffs, or the tariffs on washing machines. Those have pushed some durable goods items, the prices of those things higher. Yeah. But in other cases, I think you're right that the corporate sector will make a decision. For now, we're going to absorb this cost.
Yeah, I mean, the average American driver uses 50 gallons of gas a month. So a two-driver household, that's 100 gallons. Oil prices, we're going to talk about them in a second, are higher. I do wonder if gas prices are ultimately going to be more negative than tariffs. Either way, Michael, what is then the single there's so much going on. What is the, I feel bad for you and your team. What is the most important thing that you are watching right now, ultimately?
Ultimately, honestly, it's just how the fiscal stimulus is passing through. One of the reasons we and others talk so confidently about at least the near-term state of the U.S. economy, and by near-term I mean, say, through the middle of next year, is that we still have a lot of stimulus working its way through, including the tax cuts and its effect on consumption, and the federal budget deal. And the federal budget deal, that's interest rate insensitive spending. It's going to come whether rates are high or low, or uncertainty is high or low, and that's providing a significant boost. So we're just trying to gauge the degree to which fiscal stimulus is arriving and providing the offset against the tariffs, which is our baseline expectation.